Hey everyone, welcome to today's explainer. Look, our goal today is super clear and honestly, highly practical. We are going to demystify the completely chaotic world of commercial tech insurance. We'll be taking a very objective, data-driven approach to show you exactly how you can estimate your specific policies online, understand your real risk exposures, and ultimately, the best part, bypass the traditional corporate broker systems entirely. Let's get right to it.
All right, let's dive right in. Here's our quick roadmap for today. First, the traditional broker trap. Second, we'll break down tech E&O versus cyber liability. Third, scaling your risk exposures. And finally, the instant quote engine.
Starting off with Section 1, the traditional broker trap.
Look, you guys are scaling startups. You're moving at the speed of code. So dealing with the completely outdated paper-heavy traditional insurance industry, it's just a massive, frustrating hurdle. Actually, let me ask you straight up. Are you stuck in a lead gen trap right now? Think about it. How often has your search for a straightforward tech insurance quote resulted in endless, annoying sales calls instead of clear, actionable data? The crazy thing is, so many online tools out there masquerading as calculators are really just data harvesting traps. They don't explain typical policy limits, they completely hide the risk exposure math, and they're literally just designed to funnel you directly to a sales team. It's essentially like moving from paperwork to APIs. On one side of the industry, we have the old brick-and-mortar broker model, literal stacks of paperwork, ridiculous delays, and all that baked-in commission overhead. But on the other side, we've got the modern digital calculator approach. We're talking clean cloud APIs, instant digital quotes, and total self-service autonomy. Modern interactive tools actually empower founders with immediate, objective data rather than a high-pressure sales pitch. Which brings us to Section 2, Tech E&O versus Cyber Liability. What's really interesting here is how often these two get confused, but knowing the difference is absolutely essential for your risk management. First up, let's talk about technology errors and omissions, or Tech E&O. Think of this as your primary safety net for operational functionality. This covers you when your actual software code or your service delivery completely fails your clients. It's your protection against costly bugs, unexpected outages, and failures to meet those strict service level agreements you sign with enterprise clients. Now, contrast that with cyber liability. While Tech E&O is all about bugs and outages, cyber liability is specifically built for the scary stuff, malicious data breaches and compromised database records. If a bad actor slips past your security and steals sensitive client data, boom! That compromised data is the specific trigger for a cyber liability claim. They are two fundamentally different types of digital disasters. But here's the reality. Modern digital businesses face both of those risks at the exact same time. So the market had to adapt. A massive trend right now is simply packaging tech E&O and cyber liability together. This combined, overlapping approach has pretty much become the new standard for SaaS companies, giving you one comprehensive liability shield. All right, moving on to Section 3, scaling your risk exposures. So the crucial point is understanding exactly how these policy costs are calculated as your business grows. Your insurance needs aren't static. Every single time you hit a new growth milestone, things change. Let's look under the hood at the core mechanics of your quotes. There are three main drivers pulling the strings on your premiums: annual software revenue, employee headcount, and your user database size. It's just a simple equation of scale, right? As your software revenue climbs, as you hire more devs, and especially as those database records expand, your risk exposure scales in tandem. A data breach affecting 1,000 users has a wildly different financial impact than one affecting 1,000,000, and insurers calculate your premiums based exactly on those scaling metrics. But hey, you aren't completely at the mercy of your own growth metrics. Here's a highly actionable pro tip for you. You can actively lower your premium costs by proving you have a strong security posture. Investing in rigorous frameworks, like actually putting in the work to achieve SOC 2 compliance, signals to the insurers that you are a much lower risk. The market absolutely rewards that verified security posture with immediate, tangible savings on your premiums. Okay, let's hit Section 4, the instant quote engine. This is honestly the most empowering part of this whole explainer, opening up the traditional black box of insurance and giving control right back to you. For decades, insurance pricing has been deliberately obscured by brokers, but a true commercial tech calculator reveals what's inside. It gives you the autonomy to systematically evaluate your coverage limits, calculate your specific exposures based on those metrics we just talked about, and most importantly, verify every single quote assumption before you ever commit to a purchase. You finally get to see the math. Let's walk through what this modern, self-service binding process actually looks like. It is remarkably frictionless. Step 1, you dynamically adjust your limits and deductibles using a simple web slider, and you watch how it impacts your premium in real time. Step 2, you verify the specific quote assumptions generated from your business data. And step 3, you finalize the process and instantly receive a secure digital insurance certificate. This quick 3-step online process entirely replaces what used to be weeks of exhausting back-and-forth emails.
And I really want you to focus closely on this number, 0. That happens to be the exact number of corporate brokers you need to talk to, email, or schedule a phone call with when you utilize a properly designed online quote engine. No friction, no annoying sales quotas, just pure data.
So, I'll leave you with this final, provocative question to consider today. Is your SaaS properly covered, or are you just guessing? Look, when your code goes into production, your risks are incredibly real and highly quantifiable. I challenge you to stop guessing, bypass those outdated broker traps, and start calculating your exact digital business risks today. Thank you so much for joining me for this explainer, and keep building with confidence.